Just waiting to get some people in here. Well, regardless, we'll get started. Tonight's topic of conversation is going to be the language of price. So this is a segment that we're going to be covering entry-level trading education. My name is Andrew Crivero. I'm a funded futures trader. I trade with Tradify and Take Profit Trader. I have 3 funded accounts with over $100,000 in funding that I actively day trade with to supplement my income. And I would love to teach you how to work from home and make, it's not easy money, but with practice it can be easy. So, first topic of the night is going to be what is a candlestick? All right, this can be, or what does a candlestick tell you? A lot of people are very familiar with looking at charts and seeing green candlesticks, red candlesticks, and knowing that red obviously means it's going down, green means it's going up. But there's so much more to the story of that candlestick than meets the eye. Basically, on every candlestick, you will see that we have the open, which would be the bottom of the body. Wherever this solid line is, this will not change on a green candlestick. And if it turns red, that open price is going to remain the same, and the price would then, or the price of the asset, the candlestick, would now grow down, creating a red candlestick, or it will push up and it will create a green candlestick. So this will be live price action. The closing price, this edge of the body right here, is the one that will actually be moving and show volatility during the trading day. So as that candle's open, this close is going to be moving all around until that each candle is on a specific time frame. So if you are watching a 1-minute chart, a 2-minute chart, 3, 4, 5-minute chart, that candle is going to represent either 1 minute of price action, or 5 minutes, or 2 minutes, or 3 minutes. And we will get into using TradingView directly after that, or directly after this, I'm sorry. So the green candle, you have the opening price. Green candle will be at the bottom of the body is the open, close is the top. And a wick means that price had pushed all the way up here, but then it retraced back down. So this would then be a wick, just showing you that this candle did have momentum to push higher or to push lower. And say if the candle opened here, it opened bearish, pushed down, and then retraced and pushed back to show bullish price action. It would then push beyond where the current close is right here, push up, and then at the time of closing, it retraced back down and it closed right here. And that would be the same concept for a red candle, except you would know that because it is a bearish candle moving down, the open is at the top, the close is at the bottom. This was the lowest price that the asset reached at that current time frame, and this was the highest price that was offered for the asset in that current time frame. So that is how to read a simple candlestick and what it will tell you. Now, as far as time frames, referring back to how I said each one of those candlesticks will represent a specific amount of time, and this will help you form your analysis as to what is the trend for the market that day. If you are looking at a 4-hour chart, each candlestick will represent 4 hours of price action. Whereas that is generally where I will begin my analysis for the day, is on a 4-hour time frame or higher, potentially a daily time frame, each candle representing one full day of trading. Same thing, you can go into monthly, yearly, it's fractal, so it goes up and up and up and down and down and down. Now, as far as time frames go, I'm sorry. So we have, in theory, looking at it in terms of being a microscope or a satellite, how you're viewing time. Microscope, you're zooming in. This is where you want to place executions, and enter your positions is down on smaller time frames. But you always want to have a higher time frame narrative to your trading plan, meaning your analysis was formed on a higher time frame candlestick chart. You believe through market structure, price action, which we will cover, the trend is either going to continue up or it is going to continue down. And you would enter at a lower time frame to find your execution and entry into the analysis that you have formed on a higher time frame. So I recommend only zooming in when you are about to enter a position. You do not need to be on lower time frames unless you are taking executions. Other than that, it can become very unclear. You could be looking at a low time frame. A 1 minute candlestick chart could tell you an entirely different story than a higher time frame. A higher time frame could let you think or show you that we are bearish in structure, moving down on the chart, and you go into a 1 minute time frame and it looks like we're ripping and we have just turned around and we're going to take off and be bullish for the rest of the day. And a lot of times that won't be the case. You could end up having that severely bite you in the butt by not having a higher time frame narrative to your idea. So that we basically just covered all of those. Now we're going to switch over to TradingView, which everyone, I'm sorry, I went to my Discord. Technical difficulties, bear with me. Amateur over here. Okay, I'll fix this real fast. That's our Discord. I recommend you join that as well. The link for the Discord is on our YouTube profile. All right. So to download TradingView, it's completely free. They have a great mobile-friendly app. This looks incredibly confusing to you right now, I know, and I'm going to take off a lot of these, pretty much all of these indicators, because I want to start with incredibly simplistic charts. I want to keep this very easy. We're going to go over functions and tools, what they do, and how to use them. We're going to go to regular candlesticks. The ones that I showed previously are called the volume footprint candlesticks. Okay, we're going to ignore this area down here completely. We are only going to focus, I'm actually going to turn on the session time frames. Okay, that's going to be the only thing that we're going to look at. So this is live price action tonight. But regardless, let's start at the basics. If you were to have just downloaded TradingView and you are completely inexperienced with this software and you want to know where to begin. So over here on the left-hand side, this is going to be your cursor. You can click the arrow on the side and choose a different selection if you would like. I prefer to use the cross because we are using both an X and a Y axis. Time is just as important as price. A lot of people focus on price, but time is very important. Throughout school, when do you just look at a y-axis? You don't. So in the line section, we have all sorts of different tools to use. My personal ones that I generally regularly use are the trend lines. Those tend to be the most versatile for me. They might not be for you. You might like a horizontal array, which means you just click in one location and it forms a horizontal line directly from where you place that. Okay, but I like the trend line because you can make any length of line that you would like, and you can keep your charts a little bit cleaner. So moving from there, we will get into, these are more complex tools. In a different session, we will start learning about things like Fibonacci and things of that nature. And that really gives you good guidance as to where price will be going, or where institutional, we're not going to touch that tonight. I will prepare something in depth for that. All right. So you really don't need to worry about any of these. Well, we can go over long position. This would be a trade idea that you are having. So say hypothetically, I know that you guys are not there yet, but we can adjust the settings in this later. We will do in a different segment so that if you had a trade idea and you wanted to execute on it quickly, you can have preset and predefined risk to reward inside of this trade idea that we just drew on our chart, so that you could just simply click create limit order. Just food for thought, guys. Unless you see this logo on someone's chart up here, they're probably faking it, or one of these. If they have this logo up in the corner, which for tonight, we're going to go ahead and use simulated money. This is what I recommend to all of you guys. To start and to learn, do not use real capital. That will bite you in the butt. Always start and practice on a free program and do what I call paper trading. If you're really entering the space and you're just curious, you are not in a position to be putting up live money. You are gambling. If you want to gamble, that's fine. But if you're looking to have a strategic edge to where you can successfully do this day in, day out, I don't gamble at all. I very consistently know where price is going to go, what the draw on liquidity is, and I want to take an entry on my way to that destination. So tonight we're going to go over paper trading. So this is a phenomenal tool to help you learn. So you can go ahead and connect paper trading. What that means is that we could, in a hypothetical, see how I just clicked that button, which was right here, and that said create limit order. All right, and when I created a limit order, this is not executed yet, but I can go into these settings and you could say, if you're using, again, this is a little far down the road, but in a hypothetical scenario, I would recommend doing a roughly $25,000 account size. I'm going to teach you how to use prop firm capital. You do not need $25,000 to do this. I use other people's money to make my money, and you do that through prop firms. You'll need to prove that you're a successful trader and are a profitable trader with good risk management before you can actually pull profits out of that prop firm. They're going to put you through what's called an evaluation or a combine phase. These are discipline tests that aren't exactly designed for you to win. Can you win? Yes. Do people do this all the time successfully? Yes. It is a 95% failure rate because people quit before they get good, or they get exhausted because they didn't actually learn how to trade and they show up at the door of prop firms gambling, and they just continuously lose money taking evaluations when they weren't actually ready. They weren't even close to being ready. So you will know this by paper trading. You should always take paper trades in the beginning, fake money in the real market, get practice, become profitable, learn the rules of what it's going to take to pass an evaluation, and then start putting money towards an evaluation. Evaluations are generally in between $100 and $200. You could do a $25,000 account, a $50,000 account, 100, 150, 200. I believe there's even some that are $250,000 and $500,000. I'm a huge fan of the $50,000 accounts. I love the rules. I think it's designed really well. And yeah, $25,000 accounts are great to start with. I also believe in that. So moving forward, if we were to do a $25,000 account and we had our risk amount that we were willing to risk is 1%, that's all we need to worry about. Every time we draw this box, and you guys are going to learn through my teachings where you would put your stop loss, which would be down here. And a stop loss means that if I was to, this is fake money, so I don't care, and this isn't a real trade that I would take, but hypothetically, if I click buy right here, okay? If this gets filled, this is going to be a losing trade, so don't judge this. I'm just showing you. But if this price could come down, we have a limit order sitting right here. So if this comes down and taps that line, it is going to fill our order and we are going to enter a position. If price goes below this level, it is going to automatically sell our position so that we don't risk more capital than we have on the line. If we come all the way up to this level, we are going to automatically have, see, we just got executed. If we were to have it come up to this area, it is going to automatically sell our position for us with a profit. Again, I don't believe in this market structure, and I think we're going to get stopped out, which I was just showing this on as an example. So, but you see how it did that. It managed our risk for us. So you always want to think, if you were going to take any type of execution of any kind, you don't want to have a negative risk to reward, meaning you would never take a trade that has more risk than it does reward. See, the risk to reward ratio, 0.44. That should always be at least 1.0. If it does not say 1.0, you don't take that trade. So hypothetically, drag it up here, 1.0, great. That means we would risk $250 to make $250. Okay, so moving on. That is a tool that if anyone has questions about, definitely go into the Discord, ask in the general chat about it. I'd be happy to do, a one-on-one or a live and explain it more in depth. So back to these candlesticks. As you can see, candlestick's body, we open down here. This is where the price is going to close, right there. Price pushed up here, but it retraced back down. So we're forming a wick because the candle is pulling down. Over here, we have the price of the asset. So up here, these are the time frames that I was talking about. This dictates what each one of these candles represents. Right now, we are in a 30-second time frame. So this is very short periods of time to form candles. Every 30 seconds, there is a new one. So now let's zoom up to 4 hours. Okay. Here on the 4-hour time frame, each one of these candles represents 4 hours of time and price action. And so we can clearly see that we are in a bullish phase. That's going to be another slide, so let's get there in a second. Right now, I want to discuss the tools and candlesticks themselves. So we've reviewed the open, close, wicks represent where price has been within that candlestick's time frame. So during this 4 hours, price hit the low of, let's use this candle because this is nice and clear. During this 4 hours, this candle made a low all the way down here at $23,952. That we opened, pushed lower, and then retraced back up all the way to 24,301. By the way, we are looking at the NASDAQ micro E mini NASDAQ, which is the market as a whole. This is where most professional traders are trading daily, is in the NASDAQ or the S&P 500. They are both heavily correlated, or tons of course, institutional traders are in every asset. They love metals. They love, gold, silver, things of that nature. There's also Forex, which is foreign exchange currencies, the dollar versus the yen. These are all very complicated topics, but if you start to learn about trading futures contracts or assets of any kind, these will all become familiar with time. They're called ticker symbols, essentially, which is symbol search. So up here, if you wanted to look at a certain asset, you could click on your TradingView chart into that ticker symbol search area, and you could then refine your search. Say you want to look for stocks. Let's delete that. You have all these stocks that you can pull up right here. Mutual funds, futures contracts. I just said Forex. So this is, the British pound versus the US dollar. I personally don't trade Forex. A lot of people are super successful in Forex. So it's just whatever floats your boat. I'm a huge fan of the NASDAQ. We have crypto, different indices, the S&P 500, treasury bonds. I couldn't even tell you what a lot of these economic charts represent. It's just economic data represented on a chart. I'm going to teach you how to wait and see the economic data release. That's really what I use for volatility. Again, getting ahead of myself. Options. So in the beginning of your journey, I recommend sticking to stocks and futures. If you were to invest money that you just wanted to put away and have it in a safer investment that you don't really need to worry about, you just wanted to place it somewhere safe and you planned on holding it for 10 years, of any type of fund, if you're planning on holding your position for gains of at least, I would say, 2 years, you're going to be in the green going into a lot of these funds. Don't just wildfire off on any of them. Do your due diligence, ask questions to somebody that you trust, but those are much more safe investments. Stocks have a lot of volatility, a lot of risk, same as futures if you don't know what you're doing. If you do, you can be incredibly successful. So that covers how to search for symbols, the time frames, candlestick shapes, now, and how to paper trade. So let's move forward down to, there's obviously different ways to create, a rectangle or anything of that nature. All of your tools are going to be located on this side. You want to go ahead and throw yourself a little bit of a party during your day, you do that, Sometimes I throw parties. But if you wanted to measure a distance on a chart, you go ahead and use that measuring tool, or you can just hold down Shift on your keyboard, click, and use that. If you're doing it from a mobile device, you will want to use that measuring tool. The mobile device interface is very friendly. It is laid out a little bit differently. A lot of your tools are going to be at the bottom. Let me pull it up on my phone so that I can be on par with what you're looking at. On the bottom, you would notice that in the bottom left corner is where you'll find your ticker symbol or your symbol search. Directly next to that is going to be the time frame that I showed you up here, the duration of time per candle. And directly next to that, you will have a little pencil and a line, and that will open up your tools section. And feel free to, get in there and play. If you're using a paper trading account, there's no real money to risk. So definitely mess around with the application. Who cares if you screw it up? Just go ahead and reset your paper trading account. It's fake. Not a big deal. So that's where you learn. Learn with fake money. Learn how to execute properly. And then move on to prop firms and milk them dry. You can get paid daily for a 90-10 profit split or an 80-20 profit split, depending on what prop firm you go to. On our Discord, I have a list of the prop firms that I trust, and I know you will absolutely be paid and right on time. There are prop firms out there that have bad reputations, so do your due diligence. That isn't something you should just jump into. If you need some guidance, hop in the Discord, reach out to me, and ask, who do I recommend for a prop firm or anybody else that's in that community with trading experience. There are a couple guys in there right now that are running prop firm accounts. I know that. So people are generally friendly in this space. They don't want to see you fail. They want to see you win. So moving on back to our slides. sec. All right. Next subject. We are on how to identify trends. Okay, we will re-review this on the chart in just a second. So before we teach market structure or how to identify a trend change or things of that nature, that's really, I capitalize and most traders capitalize on catching when trends change with confirmation and institutional order flow. And I will over time teach you how to identify all of those items so that you can hop into a trade and be on the right side of the trade. If you are on the opposing side of the trade, it gets very old watching your stop loss get hit all the time. That's not fun. So it's fun to win. Everyone loves to win. And to have great analysis, to form great analysis, takes time, takes practice, and repetition. So starting here, we have an uptrend. An uptrend is when you form higher highs, higher low. So this obviously say this was one candlestick's point. You go back, or either way, higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. That's an uptrend, right? Okay. Downtrend. Downtrend. We have lower lows, higher low, lower low, higher low, lower low. Straightforward. Now, ranging or range bound. If anybody had seen any of the social media posts I made this morning, I had mentioned how we were sideways on the chart coming out of a couple of the overnight session and into New York this morning. So that is being range bound. We are essentially lacking volume, lacking participation of people coming in to trade. So with volume comes trends. Not sometimes in times of great stress, you could have a lot of volume and a tug of war. But regardless, when you are range bound, that's not an ideal time to trade. An ideal time to trade is when you have a clear trend ahead of you. That's what you're hunting, especially in the beginning. So the goal, you always want to trade in the trend. You don't want to trade when you're range bound. Okay? So moving up or moving down, both are good. Moving sideways, you're probably going to lose money. Don't do that. Now, before we move on to this, let's hop right back and review that chart one more time. So, on the chart, we can see here, we've got ourselves an uptrend, right? A high. Now these black candles formed the low. And we created another high. High. A low. Right here, very weak momentum, okay? This isn't a good time to trade. We formed a lower high, so we might have been getting ready to change order flow to the downside. But in this case, we formed a higher low and then a higher high. Overall range of the chart was higher highs and higher lows throughout the week, pretty much from Tuesday to, last Tuesday to now. So this is current price action on the NASDAQ. Now, on a higher time frame structure, like we are now, 4-hour time frame, we have a downtrend. Highs, lows, highs, lower lows, higher, lower high, lower low. Clear downtrend. All right. Right here, this is called a change in the state of delivery. We were delivering down. Price was delivering down. And now we've changed with momentum to a bullish trend. We've moved into an uptrend. So we have a change in the state of delivery, meaning formed a low right here in this downtrend. And we formed a lower high, lower low, lower high, higher low, higher high. That is your change in the state of delivery, trend change. Ideally, you want to capitalize on this. And so this is on higher time frame, right? So let's stay right here. And let's look. This is obvious uptrend on the higher time frame. But if we were to zoom in and go down to a 5-minute candlestick chart, right? Still pretty obvious uptrend, okay? There could be other days. This was the area that we were just looking at on the 4-hour chart. That was the large downtrend, right? So I'm just trying to create a good example of how a lower time frame can confuse you and make you think that there's been a massive change in the state of delivery preemptively when there really hasn't. And it's a recipe to lose money. So if you were zoomed in looking at the lower time frame, 5-minute, during this trading session, we're just sideways, it appears, and then boom, volume. I guarantee you tons of retail traders took long positions, meaning they took positions to the upside. They were buying the asset, looking for price to go higher to seek profits. If you were to short the position, that means you'd be selling it at the top and looking to buy it back at the bottom. All right, that's the beauty of futures. You can't do that with stocks. Futures contract, or you can with a margin account, but we'll get into that later. But with futures contracts, you technically never own the asset. You are purchasing a contract to buy the asset at a certain price or to sell the asset at a certain price. So you can short a position at the top, essentially buying an IOU. I am going to sell I want to sell X amount of contracts at this position at the top, and I want to buy them back at the bottom. And I want to keep the money in between because I sold them, prior, knowing that the price was going to seek lower trend, or seek price is going to enter a downward trend, and I'm going to end up in profits. All right. So that would be shorting the asset versus buying the asset, as well as why it's important to have a higher time frame narrative over a lower time frame narrative. Okay, the higher you go, this is a monthly chart. Each candle represents 1 month. Up. Weekly candles. Daily candles. Each one is a day. 4-hour candles. 1-hour candles. It just keeps going. 30 minutes, so on and so forth. All right. And in TradingView, these axes here, if you were to open it up and it looks really distorted, you can, of course, zoom in by dragging on this sidebar that will alter the scale of what you're viewing to make the image nice and clear so that you can go ahead and analyze the price action correctly. All right, I use the scroll wheel on my mouse to zoom in on the timeline, and I go ahead and drag on the price bar on the side, get my scale where I would like. You can also click the A, which auto fits the data to your screen. I don't recommend messing around with this L. You're going to confuse yourself. So stick to that for now. Okay. Let's go back to our slides. So on our next slides, we're going to begin to cover, I would say, one of the most important things within candlesticks and what it can tell you. All right. And that's going to be the fair value gap. So these are highly used in trading. I love them along with many other traders. Some traders base their entire executions off of fair value gaps. So we will get into that. Now, visualizing the inefficiency, SMC and order flow. So SMC is called smart money concepts. Now, I recommend definitely doing your due diligence into smart money concepts as well, because that is a great way to learn how to learn price action. And these are things that I'm going to be going over with you, but you can always further your education with other traders as well. You know, I am definitely not the best person in this space. I'm really great at this and I do this successfully. Don't get me wrong. I am in the 1%. I can successfully do this and consistently. And I've displayed that with a 70% win rate and, you know, an average of a 3R or higher for my return. I'm a profitable trader and I've consistently displayed that. So, but there are tons out there. If you don't see somebody have that Trade-Evate logo that I showed you in the beginning next to their trade icon, if you come across somebody on YouTube or on the internet, if up here in the corner, if this is the logo that you see consistently and they are telling you that they are taking live executions, they're lying. That is paper trading, and there is a ton of that in this space. They're not actually trading. It's not real money, and chances are they're not profitable. I, during the session, will post live executions. And in all my live executions, you can look at those photos and you will see the Trade-Evate logo. And I consistently post screenshots of my Trade Syncer, which is an application that you would use later to... That's an application that you would use later to... Let me fix that. There we go. Okay. That's an application that you would use later to connect multiple prop firm accounts. So you start with one and you build that account, and then you turn around and add another. Once you're consistently profitable and you're doing this, you add a second account. Why not double those profits? Don't you want to do that? Everyone does. So there's people in this space that are running 30, 40 accounts. I will be there, but they're making huge money every day. I do pretty well off of doing 3. So now, so back to our fair value gaps. All right. So smart money concepts view. Institutions often return to fill fair value gaps. Now, the way the market, I don't want to confuse anyone who is really entry level, all right? Because I could just go on a tangent with complicated subjects. All right, so fair value gap, the basics of it is when you have a series of 3 candles, okay? And each candle has wicks that wick up into the body of the candle next to it. But they leave a gap, all right? So the third candle wicked down into the body of that middle candle. The first candle wicked up into the body of that middle candle. But in the center, there was a large void, and that is your fair value gap, meaning that is considered fair value for that asset at that current time. All right, and it's the same thing in a downtrend. Bearish candle wicks down, retraces back up. Next candle opens, distributes, which is a word that people distributes, I'm saying, large displacement. That's when a candle aggressively moves with momentum to a direction. So whenever you see a fair value gap present itself, that means that there was displacement in the marketplace. All right. So first candle wicks low, retrace. Next candle open, displaces down aggressively. Third candle retraces back up into the body of the second candle, but left the gap in the center. So these are critical throughout trading, and they can be used to form your analysis. You will all very consistently see in trends of higher highs and higher lows. When we make a higher high and then we come to make that lower low, a lot of times we are doing it inside of a bullish fair value gap, meaning bullish candles, bullish gap. This is an area where institutional or large traders want to enter positions. They want to enter positions at a discount or a premium. They don't want to buy things at fair value. A lot of times you will see a price in a trend retrace back to one of these zones, and these zones are now in a position of being discounted or premium. If it was premium, high price for the asset, you would want to short it. You want to take your trade and you want to make money on the downtrend. If it's in a discount, you are looking to trade it to a premium and retrieve that liquidity in the middle, the money in the middle there. That's what you're going for. We're all going for. All right. So now think of it as a logical reoffering of liquidity after an institutional run. Price must reoffer to be considered efficient. Price in the market is always trying to be efficient. It is always trying to balance itself. Okay. That's why you see the tug of war. It is using market auction theory, meaning it is an auction. There are buyers and sellers coming to the table, and they are both aggressively going at what direction they want to see the trend continue. All right. And if you have large displacement, a candle that moves aggressively, the buyers won the auction. All right. And in this case, the sellers won the auction. If you see one of these form, don't just assume you're safe and it's, oh, we got displacement, you can go long now. No, these fail all the time. All right. So we're starting here. And my main thing is to try and help traders who just trade solely off of, this is essentially called pattern trading. It isn't, but it is. I started with all these concepts. It's essentially pattern trading. I teach more advanced concepts once you get there and how to incorporate institutional order flow into your analysis with this. So you will be able to actually see the auction happen in live time, be able to tell when institutions or large ticket players entered the game and where they're going to drive the vehicle next. So that's in the long run what we're going for. You start here. If you see a fair value gap, don't just assume we're rocketing up from here, okay? Because these turn around and fail all the time. All right. Now, 3 candlesticks. Let me just make sure I didn't miss anything for you guys here. Retail often mistakes are. Yes, these zones are worth marking always because price is likely to return to these. You will hear traders say mitigating the gap. And what that means is think of price as essentially a scribbling line all over the screen, and it's just drawing all over the place, right? What do we have here in the middle of these 3 candles? Large bullish fair value gap. So you could use your rectangle tool. And I want to mention to everyone that if you are new to TradingView, you don't need to use this, but a lot of software will be set up the same. So your tools, the tools that you use most commonly, like a rectangle, you're going to use that all the time. When you see that in the side tools, click that star next to it because it's going to form a favorited toolbar that's always just going to stay on your screen. So you want to keep that handy. The stuff that you find yourself using day in, day out, just add it to a favorites bar so that you could just quickly execute and make your analysis, draw things in real time, and not get lost. When you draw these things out on the screen, it helps keep your story in check. Price, this is the most manipulative space in the world, all right? And that's not a lie. So right here, big fair value gap, okay? So you can also, this is getting ahead of myself, but you can alter the colors and all the things that you would like. This is line thickness. You could turn that up. which really just makes the outer lines of the box or middle lines larger and thicker and more bold. It's exactly what it sounds like. So after you say you, for a bullish one, you wanted it to match, say you're using green candles. You want a green box so that you can clearly identify that's a bullish gap, right? You could find your settings, save drawing template as bullish fair value gap. My candles, I do blue for bullish and black for bearish. So I have a blue fair value gap, right? And a lot of times I label them. And if I'm in a certain time frame, 30 minutes, I'm going to put 30M for an abbreviation for myself, because if I'm zoomed in on a lower time frame now and I see price trade into that level, sometimes you can be forgetful that you don't even realize that, because we're so zoomed in, you know, up here, that we didn't realize on a 1 minute chart, if I didn't draw that box there, you wouldn't even know. You could watch price dump all the way down here and you'd have no idea, because the other candles are now so far away to the left because we're on a lower time frame. So you start on a higher time frame, you mark out these levels. Those are common rejection areas. So let me show you a good example of how a fair value gap played out. All right, right here we have a bearish fair value gap. Okay, and I'm a huge fan of 5 minute fair value gaps and higher. All right, a lot of those super low time frames, 1 minute fair value gaps or things of that nature, they don't hold a lot of weight and they consistently will fail. That's a very small amount of time. So you can have a little bit of price action look like huge displacement on a 1 minute chart. But if you have that type of displacement within a 5 minute period or higher, that's a good move. That's a fair value gap that you can consider would get respected. Price is going to come down, and if we retrace back into it, we'll go we'll go through this stuff later on, but we have equilibrium right here. Price retraced back into that fair value gap, and this is a bearish fair value gap. So you could be looking for an entry off of the bearish fair value gap, targeting, you know, lows or another fair value gap or things of that nature. This is very ugly price action today. This is sideways. This is a great demonstration. This week. We have an insane amount of volatility, and I get to pretty much cover a downtrend, an uptrend, and being range bound. All right, right here, great display of being stuck in a range. Price really isn't moving from there. Okay, this is really crappy trading. I was on my Snapchat this morning saying how, you know, there wasn't any volume, didn't look great, and then I hopped in a long position over here and I was able to make a bit of money. That was great. So you don't want to trade when you're stuck in a range like we are down here. All right, let me get that out of there. And this is a fair value gap. Okay, fair value gaps can be respected or disrespected, meaning if price, let me find an example of a disrespected fair value gap. Okay, all right, right there. Here, that's a bearish fair value gap. Okay, and then price, this is what I was saying, you don't just enter off fair value gaps, because if you saw this form and you're like, wow, big displacement, we just pumped up high and now we're going to dump down low, and you could have seen us trade into this fair value gap and you're like, all right, we got confirmation, we're definitely going to continue farther, and no, we didn't. So you formed another one. You could think, add to my position, build it, or maybe you were a little late to the party. You want to get in down here. You see this displacement, another fair value gap form. You think that price, if it came up, it's going to respect it and continue lower. It's not always the case. Right here, within a 30-minute window, 30 minutes, large displacement down. Next 30 minutes, chopping around, forming that fair value gap, and then boom. And 30 minutes to form a fair value gap is usually a key level. That's large displacement, and could be very convincing for you to see. We just formed a 30-minute fair value gap. That's a strong level of rejection. All right. But we just slaughtered right through it. 30 minutes at the end of the day. Boom. Close right above it. So that's an example of a fair value gap being disrespected. Price and volume and participation of buyers in the space, they disrespected that's all the short sellers at that time. All right. So that is a fair value gap, bullish and bearish. And that was an example of one being respected or disrespected. Okay. And if any of these things that we go over tonight you forget about, which is so normal because it's a lot of information to absorb. The tools, how to use them, candlesticks, highs and lows, trends, ranges, fair value gaps, all these things. Everything's going to be posted directly onto the YouTube. You can go right back to this and review it later, okay? I don't want to hold you, so let's keep going. So, slideshow here. We're on to our next one. That was our final slide for the night. The next one was supposed to be questions and answers. All right. I apparently forgot to put that in my presentation, so no big deal. But if anybody does have any questions, please, dive into the Discord. The links in our social media. I actually do want to just kind of show you guys briefly what we have to offer in the Discord. It's completely free. I'm not looking for anything from anyone. I genuinely just want to help people. There is an option to pay $30 to be able to trade with me live every day, where you get to follow my executions in real time. I'll be live watching me do what I do. And, $30 when you see the wins that I take, that pays for itself. I think that's a little ask, but that's a later on thing. You need to learn to trade before you even think of that. I'm not looking for any money from anybody in entry level. I'm also in the Discord. Like next week, I'm going to start dedicating 1 or 2 days during the normal session where I am going to be live trading in the whole free section of the Discord in a stage, because to me it's really not about the money. Trading pays my bills, but I do want to educate people, down the line as this community grows and we have a lot of people in here. Yeah, it's going to become a little bit more exclusive. The free section's never going to change. There is a free let me just show you. There's a free trading playbook, multiple page PDF that I've created, and I just want people to have. There is a free, second, I'm sorry, bear with me, amateur streamer here. So this is the Discord. I've spent months building this. I got really sick and tired of watching a lot of people in this space essentially take advantage of people. All right. They charge way too much money for what they're asking. It gets ridiculous. All right. I pay money to keep this Discord alive. And I'm happy to do it. It's no big deal. But we have, rules. People need to verify. I don't want robots in here. There's, a welcome page. We mentioned new members. We do have about 20 people in the community so far. There's announcements. We're going to be doing giveaways in here later. Gift cards and things of that nature, or potentially one-on-one sessions with me for a couple hours. Even I'm not stingy. If you get in the Discord and you ask, I'd be happy to help out a lot of people. Those are private channels for a couple of friends I grew up with, so ignore those. You can't even see those normally. But we have a live trading floor. This is where I'm going to be doing some live trading, and you guys could hop in during the day and just follow along and see how I think and see what we do here. All right. So I'm going to exit out of that. Every single day I post a deep dive into the market. All right. I give you the status of the market, code green, resolution relief, high volatility expansion, trend following, bullish trend, post ultimatum retail squeeze. This is super valuable information. All right. I essentially give you very in-depth analysis. I have an AI that I've been training for a long time while I day trade every day, and me and it every single day prepare this together based off of my analysis, and it's combined. All right. It tells you how much risk you should have, either a half position size. So say you risk 1%, that's what you should be at for the day, you know, $250, or you're only going to risk up to that 1%. Or it tells you today's volatile. Don't risk more than 0.5% per position. You know to cut that down to 125, play it safe. And it's just an incredible tool to have. It tells you exact price points that you could be mapping out. I won't go into too deep about that. Community wins. I'm constantly posting the trades that I hit and screenshots, you know, my analytics. I'd be happy to show you. This is this month so far. I'm up about 3-4 grand on the month. And we get a long way to go. 70.9% win ratio. And yeah, no. And that I'd taken more trades since that. At that time, I was up about like 2 grand on the month. So I've added about another 1,000 since then. We have the practice field. This is a page I'm probably going to be getting rid of. It doesn't really serve much of a purpose. Ignore that. This is a valuable section. All right. The trader's toolkit. This just tells you all the tools that I use and my core execution and analysis. A link to TradingView. Download it completely free. You don't, a trade syncer costs money. You don't need this until you are on your second test. You don't even need a trade copier. All right. So at that time that you've done one and now you've passed and you're profitable. Yeah, it's worth putting a couple bucks into. You know, you're going to start getting a return on investment. Until those times, don't spend money. It's foolish. These are prop firms that I recommend. I really love Tradeify. I'm going to add Take Profit Trader to this list as well. I am a funded trader with them as well. I have a pro account, and I believe I got the email tonight that I'm getting moved into their highest tier of account. I will be posting if I do in the morning, so that's exciting. I really am fired up about that. That shows we have a wealth blueprint, a trading playbook, and I'm coming up with a super detailed, very detailed execution like guide, essentially. You know, I believe it's just an execution guide. It's multi-page. I have rules in here that you should follow, what days you should trade, what days you don't trade, all of this completely free. I just want people to have it. And I have been able to go from working in construction every single day my entire life. I was paving, and then I was, you know, power wash and doing masonry, all sorts of stuff. I worked my ass off, and I thought that's what I was going to do forever. This was never even a thought. I got incredibly good at this, and I understand it very, very well. I'm now able to work from home, provide for my family. All of this cost me money. I've had to upgrade my whole entire desk. I've gotten all this equipment, and I got more lighting coming in to fix my stream, make it better all next week. All just investment on my end because I want to help you guys. This is an insane thing. If you stick with it, you can do some fantastic stuff from home, and you're not risking your money. I teach you how to use prop firm capital. Use their money. There's no risk on you. If you lose the money, you just lose the account. If you took a test for $100 or $200, you lost your money for the test. Big fucking whoop. All right. Not a big deal. Okay. Yeah. You don't want to do that until you know you're going to make money back. But we have general chat, which will remind you anytime I'm live. I have a news feed in here, which has, you know, financial juice, marketwatch.com, Forex, all news, Fox Financial, Breitbart, like just a ton. And I'm so open to, if anyone, even Donald Trump's tweets that move markets get pumped immediately into this channel in real time. So that way, if you're in here with me and we're in a position and it's about to tank or reverse in the other direction, I got a heads up. All right, we're good. So I got world news pages, crypto news pages, all of this for free. Trade Logic live suggestions. If you guys have any questions about anything at all, throw them right in here. I can dedicate time to that in a video and make sure that we're covering things that you really need. Trade Logic live chat during sessions. I just started this last night, this whole series. So if you have something during a live that you want me to see and be responsive with, throw it right in here. Okay, I see it during the stream and I will get right back to you. If I start rocking in my chair too much or laughing like a hyena in the microphone, you throw it in the chat, you let me know. Okay, so all sorts of stuff. Later on, if you wanted way down the line when you're doing this profitably, or you're taking tests and now you want to hone in and really sharpen those skills and make sure you're on your A game, you could then, if you wanted, pay $30 a month and come trade with me every single day and have me over your back essentially as your coach. All right. So that I think is very well worth it. But tons of free resources. I really appreciate anyone who's still here watching this. I'm super psyched. If you are, thank you very much. Please like and subscribe. I'm still very new to this, so any suggestions, leave comments, anything of that nature. Let me know how I'm doing, how I can improve, how I can help you better, and let's make some money. Let's go, let's grow. So I really hope to see you guys next week. I will be doing Wednesday is going to be dedicated for a more advanced live session, more complicated studies, a little bit beyond probably your strengths right now, but everything will be archived and recorded. So, and Thursdays are going to be dedicated to these sessions. So next week we will pick up right where we left off and keep going. All right. I really, really appreciate you guys coming in, and go find, spend 5 minutes a day at least until next week's session, going into the charts and trying to identify trends, identify when we're range bound, when we're in a bullish trend or a bearish trend. All right, so spend 5 minutes a day doing that till next week's session, and also look for fair value gaps while you're at that, just to practice and become familiar with identifying market structure. So thank you guys so much. If you want to join the Discord, the link's in the bio. Again, have a great rest of your night.